Right friends, welcome back to News Analysis and Features for week 46, that is from 9th to 15th November, and we are going to discuss three gold schemes: Gold Monetization Scheme GMS, Sovereign Gold Bond Scheme, then India Gold Coin. These three schemes were announced in the budget and government launched recently. Under various lecture classes, we deliberated in a piecemeal manner as and when the government announced these schemes. Now we are going to deliberate in detail about what is the purpose of these gold schemes. Before going into this, some of you may have doubt what is meant by bullion. Bullion is either bars, plates or ingots. You are looking into this picture. These are bars, plates, ingots, either for gold or silver, and these are basically used as a base metal for manufacturing ornaments. If someone says bullion, don't confuse. Bullion means bars, plates, ingots either of gold or of silver, and these ingots are used basically to prepare ornaments as a base metal. So this is bullion. Look into this. All of you are familiar with gold ornaments, and look at the facts. If you talk about India, our annual gold consumption is 800 to 1000 tons. And other interesting point is, in 2014, we surpassed China in annual gold consumption. Now, India is the largest consumer of gold in the world, and in 2015 also we are ahead of China, and for the past few years our gold consumption is in the order of 800 to 1000 tons, and unfortunately almost the entire quantity is imported. We are not producing gold. Our gold production is totally insignificant, and this 800 to 1000 tons of gold is imported every year. And for import, and please do not forget, gold import is a non-essential import. Imports are two types. One is essential import, the other one is non-essential import. Essential import is like oil. When you are importing crude oil, it is to be imported. There is no way out because our production is not sufficient to cater to our requirements. That's why crude oil is to be imported. That is essential import. Whereas gold is non-essential. If you are not wearing gold, nothing will happen. But without oil, our economy cannot progress. So that's why oil is essential import, gold is non-essential import. But we are importing almost 800 to 1000 tons of gold every year. And interestingly, Indians hold 20,000 to 40,000 tons of gold. One estimate says we are holding 20,000 tons. Other estimate says we are holding 40,000 tons. Whatever it is. But every year, because of imports, our gold imports constituting roughly $35 billion. That is more than 2 lakh crores. 2 lakh crores rupees of gold we are importing every year, that is $35 billion, and it is 8% of our total imports. And under this scenario, what is happening? Our trade deficit is increasing. Trade deficit means the difference between imports and exports. Our imports are more, exports are less. That's why trade deficit is increasing. Because of trade deficit, the current account deficit is increasing, and we are in trouble because of these reasons. That's why government want to reduce gold imports. That's why to reduce current account deficit. That means with a view to reduce trade deficit, with a view to reduce current account deficit, government brought these gold schemes. The three gold schemes as announced by the government was recently started by the Prime Minister. Please look into this picture, and here three gold schemes. One is the gold monetization scheme. The basic idea is As we have already discussed, Indians are holding 20,000 to 40,000 tons of gold, and government feels that it is lying idle, and under gold monetization scheme, people will bring out their gold from the houses, people will surrender the gold under gold monetization scheme, which will be used for manufacturing jewelry within the country, which will be used for manufacturing coins, so that gold imports can be minimized, so that the current account deficit can be reduced, so that foreign exchange, precious foreign exchange can be saved. The idea of these three gold schemes is, under gold monetization scheme, people will bring out their gold and surrender, which will be used for making jewelry, and at the same time which will be used for making coins. That means our internal requirement will be met by the gold which is surrendered by the people. And second important point is, if someone wants to purchase gold, government will give gold bond. Instead of physical gold, you will get gold bond. So these are the measures to reduce import of gold so as to save precious foreign exchange, right? So let us look at the schemes one by one. The first is gold monetization scheme. As I have already told you, gold monetization scheme is bringing the gold from the houses and surrendering to the government. Government will take care of gold price escalation, and government will pay some interest also. So with that intention, this gold monetization scheme is brought by the government, and this replaces the previous gold deposit scheme of 1999. In 1999, government brought gold deposit scheme, under which only 1% interest was given, but it was not successful because of various reasons, and now government came up with the modified gold monetization scheme. Resident Indians, that is individuals, Hindu undivided families, trusts, including mutual funds, exchange traded funds registered with SEBI, are eligible to participate in this gold monetization scheme. And here, whatever people are surrendering, it is either in the form of bars, coins, jewelry, everything is accepted, and minimum raw gold under this scheme is the 30 grams, maximum no limit, purity will be 99.5% fineness, maximum no limit, and gold will be accepted at purity testing centers. BIS, Bureau of Indian Standards, will nominate collection and purity testing centers across the country, and they are yet to nominate. As per the scheme, Bureau of Indian Standards will nominate collection and the purity testing centers, and you have to surrender gold there. And here, principal, that means after surrendering the gold, the principal amount as well as interest will be denominated in gold terms only. If the gold price increases, you will get more money. If the gold price decreases, your money will go down. Normally, under normal circumstances, the gold is expected to escalate. That's why people will be benefited. That means the gold monetization scheme is, you will surrender gold, and if the price of gold increases, government will take care of it. In addition to it, some interest will also be given. The main purpose of gold monetization scheme is the idle gold lying in the houses should be brought out and surrender, so that the surrendered gold will be used for making ornaments, so that the imports can be minimized, such as the foreign exchange will be saved and current account deficit will be minimized. Look at the other aspects. It is to surrender jewelry, coins, bars to banks or central government. Gold will be collected, I have already told you, at the collection and the purity testing centers. Minimum lock-in period and penalty will be decided by the banks, and all the scheduled banks except RRBs are eligible to implement this scheme. Know your customer norms will be applicable, and banks can sell or lend the gold to MMTC for minting India gold coins or to jewelers, and gold under MLTGD. You may ask, what is this MLTGD? We are going to discuss a short while from now. And gold under MLTGD will be auctioned by MMTC as per Government of India instructions. So these are the other aspects, but here I would like to tell you there are two classifications under this gold monetization scheme. First and the foremost is for a period of 1 to 3 years, under gold monetization scheme, banks will accept on their own. This is called short-term bank deposit. Short-term bank deposit is for a period of 1 to 3 years. Banks will accept on their own. Subsequently, whatever the gold received by the banks, they can lend it to MMTC. They can lend or sold to MMTC. You may ask, what is MMTC? MMTC is Metals and Minerals Trading Corporation, that is public sector undertaking. So for 1 to 3 year deposits, banks can lend or sell to MMTC for minting India gold coins, or banks can sell to jewelers for making jewellery. So these are the stipulations when banks collect under monetization scheme. This is for 1 to 3 years duration. The second one is medium and long term government deposit, or MLTGD. Medium and long term government deposit. These are accepted by the banks only, but on behalf of central government. On behalf of central government, banks will accept under medium and long term government deposit. Under gold monetization scheme only, there are two parts. One is the short term bank deposit, the other one is the medium and long term government deposit. Here the duration is 5 to 7 years for medium term and 12 to 15 years for long term, and this gold will be accepted by banks on behalf of central government, and this gold will be auctioned by MMTC. Redemption will be in Indian rupee equivalent to the value of gold. And there is a slight difference between these two schemes. One is under short term bank deposit. There is option of getting back gold or cash after the agreed period. Either it should be 1 year or 2 years or 3 years. After the agreed period, under short term bank deposit, you will have two options. You can get back gold, but not the jewellery you surrendered. They will give you gold in other form, not exactly your jewellery. So under the short term bank deposit, you have option of getting back gold or cash after the agreed period. But under the medium and long term government deposit, the redemption will be only in the form of cash depending on the value of the gold after the agreed period. So this is the slight difference between these two. These two are under gold monetization scheme only. If it is for a period of 1 to 3 years, they will be accepted by banks as their own gold deposit. And if it is for a period of 5 to 7 years and 12 to 15 years, that will be accepted by banks as custodian on behalf of central government. And if it is short term deposit, after the agreed period, you have option to get either gold back or cash. But under this medium and long term government deposit, you have option to get it back only in rupee equivalent. Right friends, this is about the gold monetization scheme, and whether it is going to be successful or not, we will discuss at the end of this lecture. The second one is sovereign gold bond scheme. The main purpose is, if you want to purchase gold, people invest in gold also because there is every possibility gold price will increase. Here, if you want to invest in gold, you will be given gold bond. If the gold price increases, your bond price will also increase. And at the same time, you will be paid interest of 2.75% per annum also, twice in a year. You will be paid interest every year, twice in a year at the rate of 2.75% per annum. That is one aspect. The second aspect is you will be given gold bond. If the rate increases, your bond value will also increase, and the price you will get after the agreed period depending on the price of the gold, and in addition to it, you will also get interest. The main purpose of this gold bond scheme is people who are inclined to invest in gold, they can take a gold bond instead of physical gold. so as to reduce imports. So the points I have given here, government will give gold bonds instead of physical gold, basically to reduce imports. Third point is issued by Reserve Bank of India on behalf of central government, and this gold bond, whatever the money government is collecting, that is a part of market borrowing program. All of you are well aware, central government borrows from market. This year the market borrowing program is around 6 lakh crores of rupees. Basically to bridge the fiscal deficit, central government borrows from market, and the route which is used by the central government is through SLR route. All of you are well aware. And under gold bond scheme, if people invest, that is a part of market borrowing program of central government, and these gold bonds will be sold through designated post offices and banks, and only sold to resident entities, and issue and redemption prices will be fixed based on previous week's price of gold with 99.9% pureness, and published by India Bullion and Jewelers Association Limited. I have already told you interest is 2.75% per annum, payable semi-annually, that means once in 6 months. The period is 8 years, and exit option will be there after 5 years. Available in demat form or paper form, demat electronic form or paper form, you will be given bond physically. Tradable in stock exchanges, these bonds can be traded in stock exchanges, and these bonds will be accepted by the banks as collateral security for loans also. So these are the features of a gold bond scheme. Sovereign gold bond scheme is, instead of getting physical gold, you will be given gold bond. The first one, gold monetization scheme, is you have to surrender gold, and if the gold value increases, you will be paid accordingly. Third one is India gold coin. This is the first national gold coin ever contemplated by India. Government will mint gold coins initially in 5 grams and 10 grams, and bullion in 20 grams. You may ask, what is bullion? I have already told you in the beginning, bullion is bars, plates. 5 grams, 10 grams coins will be minted, 20 grams bars will be minted, and under this scheme, first ever India gold coin will be issued. Ashok Chakra will be there on one side, Mahatma Gandhi image will be there on the other side, and initially issued in denominations of 5 grams and 10 grams, and it will have advanced anti-counterfeit features and tamper-proof packaging. These are hallmarked by BIS, available in MMTC centers across India. I have already told you, MMTC is Metals and Minerals Trading Corporation, easy liquidity. Previously, we used to import gold coins from foreign. Now, with the minting of gold coins, dependence on foreign gold coins can be reduced, and whatever the gold required for minting these coins will be procured through gold monetization scheme. I have already told you, people will surrender under gold monetization scheme. Whatever the gold they are surrendering, that will be used for minting these gold coins. Right? So, these 3 gold schemes. And you may ask a pertinent question, can these schemes will be successful or not? Only time can say, but the constraints, first one is, Indians are culturally, traditionally attached with gold jewelry. All of you are well aware, if some marriage or some function is there, exhibiting gold jewelry is common among Indian women, and parting with it may be difficult. Second is, under gold monetization scheme, you have to surrender gold, and which will ultimately be melted, and it may be against the sentiment of Indian women. Third one is, under gold monetization scheme, when you are surrendering gold ornaments, there will be lot of wastage, and if you want to repurchase jewelry again second time, you have to pay for lot of wastage. Not only that, making charges, you are losing both the times. That's why economically it may be unviable for the Indian woman. Fourth interesting point is, interest rates may not be attractive. Outside, the inflation, the rate of return in assets like real estate, mutual funds are higher, and It is to be seen whether the interest rates of around 2% will satisfy the customers or not. The fifth point is why people invest in gold bonds when other financial instruments like real estate, mutual funds, stock markets are giving more results. Last one is wearing jewellery for social status is generally considered to be norm in Indian women, and whether Indian women will agree to this scheme or not. So these are the pertinent questions. Only time can say whether this is going to be successful or not. Right friends, with this let us conclude our news analysis on gold schemes, and during 47th week news analysis we are going to discuss on FDI, whether the liberalization of FDI norms will benefit the economy or not, and what is the difference between FDI and foreign portfolio investment. These we are going to discuss in 47th week news analysis. Please do join for other modules. Have a nice day. Thank you.